All right, so August is in the books. We are basically sitting right at all-time highs. Looking forward to a little bit of volume coming back in the market. But I want to talk today about entries because I have seen people argue, professional traders actually argue, that the entry doesn't matter. It's how you manage the trade. It's how you exit. It's how you scale out. And I always take the other side of that argument. I've been doing this for a long time. And for me, like, I don't want to say the holy grail, but a huge step in turning my process into a profitable one was learning to time my entries. So that's what I want to talk about today. Let's get this going here. All right, so traders get in trouble when they're red in a trade, right? I mean, when I first started trading, I felt like every trade I took, I felt like someone was standing over my shoulder getting ready to make me red the second I took a trade. I take a trade, boom, I'm red. Next thing you know, I'm wondering, should I average down? Should I, do I buy more? Do I get out? I don't want to take a quick loss. That'll suck, blah, 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 right? So when you're red in a trade immediately, already you're going to succumb to all the problems of the traders face. What do I do now, right? If you learn to time your entry so you're green right away, then your only worry becomes how and when to take profits. That's a great problem to have. So learning proper entries and waiting until you find one before pulling the trigger, it'll vastly improve your trading results. So here's a couple examples from our trading room this week. I just threw these together. Notice the timing of these entries. When you're green right away, you stay out of trouble, right? Wayne called this one yesterday. 1236 AOBC, the old Smith & Wesson. Look at where that trigger price was. 1236, right there where that arrow's touching, you're never underwater. So then what's the problem? You take the entry and you have to figure out how to take profits, but you don't have to worry about averaging down. You don't have to worry about, should I add more? Did I time, what am I going to do now because I'm red? I don't want to take a quick loss and be red, $100 in 3 minutes. That's ridiculous. Well, I've seen a $100 loss in 3 minutes turn into a $3,000 or $4,000 loss later in the day by not getting out. So the beauty of entering properly and knowing when to enter is really twofold. Is one, if you do it right, you're scaling out into strength and you're green right away and you're just paying yourself. But the untold part of it is if you know how to enter properly where you should be green right away, right? You took it, at an inflection point with a couple catalysts on the chart just above, just like we teach in our course. You time that perfectly, and guess what? And then when they don't start going higher, they don't start knocking down the catalysts above that you were planning on, or maybe they knock down one of the catalysts, right? Maybe they break resistance in the next 2 or 3 minutes and come right back to your entry. That's also telling you something. It's telling you that your thesis wasn't right. So then you can get out flat or for a small loss. So for me, teaching people how to enter properly creates such a positive environment because when you're right, you're just paying yourself. When you're wrong, you know to get out because your thesis didn't play out. That's a huge warning sign. So GERN from earlier this week, sorry. I called that a 506. I used my cursor here to show you why. All right. There was, first of all, the daily chart, which you can't see here, but the daily chart looked beautiful, right? And then you had this early pop. And now just picture this. If you just get long, if you have no system, and you get long on this opening 5-minute candle, because you say, well, GERN's been really strong and it's ripping right out of the gate. You get long right here. If you're not selling here going, whoops, I screwed up because my entry didn't make sense because I just chased the opening move, and then you're not selling here because now you're saying, well, you know what, I can't take the loss. Now, you're probably selling down here as it's taking out the lows because then you're like, well, I really screwed up. But look what happens when you time your entry correctly. You make it set up before you get involved. So there's the initial push, takes out the low of day, then it puts in a lower high. As it's climbing, by the way, we start to think, okay, bulls are starting to win here. If this takes out the high of day, it's probably going to rip. And then it starts to roll over again. And so this is why I called this in chat at 506. I figured if it took out this lower high, you've still got a catalyst above. So I wanted to get long at 506 over this lower high was 505. 506, the stop at 499, 7 cents away. And now I'm thinking if I get long here as it takes out this lower high, there's a strong chance right here that anyone who shorted here is going to start to cover, which could push it through the high of day. And once it does that, it tests yesterday's high, flags for a little bit, pops again, flags for a little bit. But you notice from that entry, you're never underwater. So for me, it's all about timing your entries. All right, that's a huge part of our trading course and what we teach. Trading to me should be long periods of being in cash, and then you get involved if and when you get one of these setups. Right, takes all the other problems out of trading. Almost like a hunter or a sniper. Right, long periods of sitting doing nothing. And you got to enter, you got to strike at the right time. Anyway, that's my little rant on timing your entry. Check down below for our Labor Day special. A couple really neat offers, one on the chat room and one on a combo deal for the chat room and the course. So check that out. I'm done babbling. Enjoy your Labor Day weekend, everyone.